Hello everyone. In this video, I will try to show you how all financial assets in the stock markets move metrically, especially. I want to emphasize that the movement of any type of financial asset, such as crypto assets, stocks, and forex pairs, moves within an absolute measure. These movements are controlled by large budget institutions and organizations such as market makers, robot software, central banks, and fund managers. If small investors carefully analyze these metric movements and identify the correct entry and exit points, they can guarantee an increase in their capital. Experience gained through carefully conducted technical analysis studies is the most important factor over time. Those who cannot achieve this or risk their capital without proper education claim that the stock markets are a form of gambling. However, no financial asset moves randomly and without reason. Those who go bankrupt try to cover up their own ignorance and incompetence by blaming the financial assets traded in the stock markets. This video was created to provide you with a special knowledge. Learning the metric movements of prices and the buy, sell signals of indicators is certainly difficult, but it is the essence of trading. Of course, we can name Fibonacci types and expansions as the main tools to measure the movement of prices. Please watch carefully without skipping. In this video, we will learn how to trade by measuring the price with the Fibonacci tool, which forms the basis of stock trading. As an indicator, we will use only one 200 parameter moving average line and the volume analysis indicator. To enter trades more effectively, you can use the moving average line as exponential moving average or simple moving average according to your preference. Let's briefly introduce Fibonacci numbers. Fibonacci retracement is a technical analysis tool that uses horizontal lines to indicate areas of support or resistance at the key Fibonacci levels. The price continues its original direction. These levels are derived from the Fibonacci sequence and are based on the mathematical relationships between numbers in the sequence. The most commonly used levels are 23.6%, 38.2%, 50%, 61.8%. and 78.6%, but traders may also use other levels such as 19.1% or 88.6%. Traders use Fibonacci retracement levels to identify potential areas where the price may reverse, and then use this information to make trading decisions. For example, if the price is trending upwards and reaches the 61.8% retracement level, a trader may interpret this as a potential area of support and look for a buying opportunity. Conversely, if the price is trending downwards and reaches the 61.8% retracement level, a trader may interpret this as a potential area of resistance and look for a selling opportunity. Now that we have learned about the Fibonacci levels that form the basis of all trading strategies in theory, let's apply them to prices on a chart and gain practical experience. As you can see, here the price is rapidly falling from a high level and trading below the 200 moving average line. Later, it forms a bottom by making a retracement towards the moving average line. Currently, we can see a very clear peak and bottom level. Since the price is now trading below the moving average, we will pursue a short position opportunity. We draw a support line to the right from the bottom level, and also extend our Fibonacci tool from the peak to the bottom level, where we drew the support line. Traders who prefer aggressive trading can enter only after the price retraces from the moving average line, without breaking the support line. However, in this example, we will enter a short position after seeing the breakdown of the support level and the strengthening of the downtrend. As you can see, the price continues to be squeezed between the moving average line coming from above and the support line we drew. This situation will most likely cause the support line to break. We are waiting patiently, and our expectation has been realized. Also, The volume analysis indicator supports the strong breakthrough with a yellow column. Now, we can take a short position. The stop-loss level can be set above the last swing high or above the 200-period moving average line, depending on the trader's risk management perception. The first profit-taking level will be the Fibonacci 1.618 level. If the price reaches this level, we will move the stop-loss level to the entry point of the trade. The final target will be the 2.13 level. We have found a great entry point for the trade, because the price reached our first target, which is the 1.618 level, without going to the red area. At this level, the trader's preference may be to either close the position entirely or take some profits, and continue to the 2.13 level. As you can see, the trend made a short turn and hit our entry point, and our trade closed with the profit we took. Let's now look at another example of a short position and reinforce our understanding. We have a bottom formed below the moving average line. We draw a support line to this level and extend our Fibonacci tool from the price peak to the support line. Three candles after the support line is broken. Volume analysis indicator showed a yellow bar, therefore, the closing price of the last red candlestick will be our entry point. Since we entered the trade below the 1.13 coefficient, our first profit target will be 2.13. Our ultimate goal is the 2.618 coefficient. Why aren't we using the 1.618 level in this trade? May come to your mind as a question, because we entered the trade below the 1.13 level. And the 1.618 level is too close and would provide a profit lower than the amount of risk we are willing to take. Therefore, we set our first target at the 2.13 Fibonacci ratio for a risk-reward ratio of 1 to 1.30. And we have reached the Fibonacci 2.13 ratio, which is the 1 to 1.30 profit level. Now it's up to you whether to close the position completely or take some profits. And aim for the Fibonacci 2.618 ratio. Make sure to move the stop-loss level to the entry point. Please remember that we are not market makers and we shouldn't lose the profits we have in case of a market reversal. We've hit the full profit target this time. Friends, now let's take a look at some long position examples. We see that the price is trading above the moving average line and has formed a peak by pulling back towards the moving average line. We draw a resistance line at this peak level and extend our Fibonacci tool from the lowest point to the resistance line we drew. As you can see, the resistance line was broken upward. The volume analysis indicator also confirmed this with a yellow column. We enter the trade from this level and set the first target as the 1.618 Fibonacci ratio. The ultimate target will be the 2.13 ratio. Let's take a look at one last example of a long position and conclude our video. The Fibonacci tool you learned in this video forms the basis of all trading done in all markets. Especially make sure to save, download, and share this video. I would also be very happy if you hit the like button. Thank you.